Hello and welcome to today's review of the True Potential portfolios. My name is Chris Leyland and I'm an investment director here at True Potential. So during this video, I will discuss the performance of the portfolios, talk a little bit about stock markets, and then finally look at any changes we've made to the portfolios over the month of July. Okay, so let's start off with performance, and I'm pleased to say that we've seen positive returns from all 10 portfolios, with investors being rewarded for taking more risk as equities outperform bond markets. Europe was one of the strongest performers, bouncing back from earlier in the year as headlines have started to recede around geopolitical risk, particularly in respect of Italy. Looking further out, all portfolios are in positive territory for 2018, and since launch, returns of around 45% can be seen for the aggressive portfolio, and that's performance we're incredibly happy with. Moving on to markets, as discussed before, equities have outperformed bonds with all the main equity regions posting positive returns. Europe has been strong, as has the US, enjoying quarterly company earnings figures coming in again at incredible levels, with Donald Trump's fiscal stimulus action of enacting tax cuts driving US stock markets further ahead. Bond markets posted mixed returns, with the higher risk and more esoteric areas such as global high yield and emerging market bonds posting the strongest figures. Currency continues to be an important feature within stock market returns, with sterling weakening against the US dollar, which actually provides a boost to return for UK investors, adding value to their overseas holdings and adding value as well to larger international companies listed in the UK. Okay, so let's move on to the performance of the underlying funds. The True Potential UBS fund range and also the True Potential Goldman Sachs Income Builder fund provided some of the best returns. The True Potential UBS funds have a larger weighting towards US equities compared to other managers, and also the currency fund CARS they invest into has continued to show stellar performance. The portfolios have been rewarded for their overweight stance towards UBS. For Goldman Sachs, the True Potential Goldman Sachs Income Builder has done very well, with the management's strong stock picking ability showing through, but also stock markets becoming less narrowly led and starting to rotate into more income-focused names, boosting share prices. Looking at activity within the portfolios, the main trade has been to add to the True Potential growth-aligned fund range within all 3 plus portfolios for the first time. Regular viewers will know that we've been adding the new funds into our baseline portfolios over the previous months. Why is that? The funds offer a low OCF, an innovative performance fee, aligning True Potential with clients' interests, and the ability to draw upon all of the expertise from our fund manager partners within the True Potential portfolios to harness their intellectual prowess and to add to style diversification. Outside of the plus portfolios, we've slightly reduced the holdings of 7IM in the defensive and aggressive portfolios, adding to UBS and the growth-aligned ranges. For defensive, 7M have been gradually adding to risk, taking down their overall cash levels and thus adding to the potential volatility of the fund. UBS have been added specifically for their ability to target returns outside of traditional equity and bond holdings through their exposure to their currency fund CARS. Within aggressive, the value style within equities for 7IM has lagged and could continue. Therefore, we've slightly increased the weighting towards the growth-aligned fund position, reducing overall exposure towards emerging market equities, an area that's struggled over the year as the Federal Reserve raised interest rates. Looking ahead, I sit down with both advisors and end clients. I'm always asked the same key questions around Donald Trump, Brexit, and everyone focuses on negative media stories, particularly geopolitical. If an investor only ever focuses on the negatives, they'll never invest and thus lose out on returns. Look back at the 45% return our aggressive portfolios generated. If we think back over the past 3 years at all the various potentially negative events, however, stock markets have continued to be strong. In a low interest rate world, it's necessary to take some risk in order to gain a decent return. Often it makes sense to stand back and look at the current environment and think, what do we have? We have an accommodative monetary policy, a generally strong world economy, particularly in the US, and finally company earnings are continuing to be good, all of which bode well as we move forward. Lastly, investors must continue to diversify their investments to look for global return opportunities. The True Potential portfolios offer advanced diversification, not only investing in different geographies and asset classes, but also diversifying by fund manager style, something that is unique to True Potential in today's marketplace. As always, thank you very much, and I will speak to you very soon. Thank you.